Welcome back to the channel, everybody. I am Mick Alphanim. So let's start off here with this tweet here from Michael Venuto. It's going to lead us into some very interesting articles. It might be close to time where we can play. You remember that from that movie? Come out and play. What movie was that from? You know? This tweet goes as such. Investors are building up their cash reserves in a way they've done only twice this century. The redacted recession and, that time, and the financial crisis. Look at this chart. That is a lot of cash, a lot of kizash, a lot of clams, a lot of guap, a lot of bones. That's a lot of chicken. Give me some other terms for money. What are some other terms people use for money? Anyway, it says investors piling into cash. Money market funds have seen the biggest quarterly inflows since the redacted. This is from Bloomberg, source ICI Bloomberg. Okay, so it's reputable. Look at that chart. Ooh-wee. That cash is going to go somewhere. Cash is, listen, I know a lot of people say cash is king. I know at certain times it does seem that way. Cash is trash. Gold is king. I don't know what people are talking about. Gold, you can use gold anywhere. You get that gold card, you can liquidate that gold anywhere just like you use crypto. But that's just my humble opinion. That's not financial advice. But anyway, because cash is trash, my humble opinion, they're going to want to put that cash somewhere, protect its value since it can fluctuate. And heck, if the BRICS nations keep doing what they're doing, that cash value is going to plummet. That cash can make its way into crypto. It can make its way into stocks. Don't worry. I have articles coming in the following chapters down below. You can skip this part about an altcoin season. Another article about a bull run. Oh yeah, it's looking interesting. Interesting, right? But this chart tells you a lot. Let's move on here to this next article. All right. This article is from coinedition.com. Check them out. They've been doing a fantastic job today. Holy smoke, they were just releasing just one powerful article after another. Give them some traffic over there. This one is titled, Crypto Market Sees $55 billion inflow. Altcoin season is here. This is what they're saying, says analyst. All right, let's scroll down here. Hope you all are having a good day out there. Appreciate every single one of you. Thank you for everybody that leaves comments. I see them. Appreciate you. I was a little tired last night, so I didn't hang out in the comment section for too long. It says here, this week, the price of Ethereum crossed 2K for the first time in nearly 1 year. Expert crypto traders believe the altcoin season has begun. So investors have plenty of opportunities to make significant returns, provided they proceed cautiously. Yes, I'm glad they said that. Be careful. Ooh, yeah, some quick money plays out there you can make some money off of, especially coming up. But be careful. Do your own research. Protect yourself at all times. Stay on top of the catalyst. Be careful. It says, according to analysts, liquidity flows from Bitcoin to Ethereum in a bull market, then altcoins, and finally the bad coins there before the cycle repeats itself. A German crypto influencer on Twitter argued that the current phase is more like 2019 than a real bull market. He said investors should expect coins to react more slowly with sudden price jumps, violent crashes. And I think the crash, like I said before, I firmly just see a crash, not just in crypto, but overall, just because of how the global economies are doing. They're doing terrible. The banking systems are in flux. They are in big trouble. Over nearly 200 banks are at risk right now. They have not corrected that. Monetary policy has not corrected. So because of all of that and the house of cards sort of leaning, I just expect there's the possibility, not a guarantee, there's a possibility of crashes in a multitude of ways. But I mean, it's something you just have to stay on top of and follow the catalyst so you know whether it's going to happen or not. There's no guarantees in anything, right? It says here, he said investors, okay, well, it says, and the unpredictable cycle ending. Let's scroll down here and see if they have a little bit more. According to data From the market tracking website CoinMarketCap, the global crypto market saw an inflow over $55 billion in the last 24 hours, putting its market share at nearly 1.3 trillion. The new milestone, the most popular crypto, Bitcoin, attained, contributed immensely to the new figure. Okay, so I'm going to leave that there because they go a little bit deeper. But of course, an altcoin season definitely will have an impact on the bank coins. All right. Of course, I'm looking for regulatory clarity. I'm hoping for something like that. It's looking good this year. We'll get to another article about that coming up very soon. So this article here is titled Three S&P 500 sectors that say a new bull market is near. We're getting all this information at the same time. This is a very strange day. If you get a chance, go over to the members only section, watch those videos I put out earlier. There's so many different entities saying the same things all at the same time. I don't remember ever seeing something like this. And I left out a lot of articles I could have put in. Well, we'll keep an eye on that, right? There's a lot of possibilities. Well, let's move on here. It says the bearish market for U.S. stocks may be nearing its end. Obviously, if there's a bull market for the stock market, there's going to be a bull market for the crypto market. They sort of move hand in hand, right? But it says the bearish market for U.S. stocks may be nearing its end. According to an analysis of the market's sector rankings, the sectors that usually perform best at the end of bear markets are the ones that are improving. There's your sign. The opposite happened in the 3 months leading up to the October 2022 low. While some enthusiastic bulls later declared that this would mark the end of the bear market and the beginning of a new bull market, I argued that the sector's ranking made this impossible. Sectors that typically do best at the end of a recession. The picture is brighter today, as is evident in the chart above. To build on this one, I compared the 3-month returns of 11 S&P 500 SPX sectors with the averages over the last 3 months of all bear markets since 1974. To appreciate how much the situation, okay, that was strange. I'm reading it in the thunder just crashed right when I said that. Interesting. Yeah, thunder threw me off. It says to appreciate how much the situation has changed since last October, consider the rank correlation coefficient between the sector's 3-month returns and the historical average. This statistic ranges from a theoretical maximum of 1.0 when the two rankings are identical to minus 1.0 when rankings are completely reversed. In the past 3 months, reaching a mid-October low, the rank correlation coefficient stood at minus 0.59. It is currently plus 0.44, a significant improvement. Of particular note in the chart are, quote, industrials and, quote, financials, the two worst performing sectors over the last 3 months of the bear market. This is in line with the average for the last 3 months of all bear markets since 1974. So things are getting interesting very fast. Keep in mind, there was the article, I'm not sure if I read this one in the last video or not, but there was the article where there's a large company saying that there may be a pause in rate hikes in June, that they're expecting 25 basis point raise from the Fed in May, but then there may be a pause on those in June. So we'll see what happens. If there's a pause, obviously, that definitely would have an impact on things, right? So now let's move on here. So the article says the major U.S. banks, including Bank of America, JP Morgan Chase, Wells Fargo, this article is from 3 months ago, are planning to introduce a new system that uses digital wallets linked to customer credit cards and debit cards. Let me stop there. This is why they fear. They both are in awe of, and they fear XRP, XLM, Algorand, because we can do the same thing, but easier. And not just in the US, we can do it globally. Stellar can issue wallets, and we have, listen, Stellar, Ripple, Volante, whoever, Algorand, or anyone building on Algorand, we have great relationships with the non-banking financial institutions like Visa, MasterCard. We all know that. We can issue wallets, and people don't need banks anymore. We can issue wallets, and through those relationships with MBFIs, we can have some sort of debit cards or prepaid cards or something like that. and have the wallets act as like you're banking yourself. You have your own account, and then use the capital from those accounts via your debit cards or your credit cards, whatever they're going to be. We can do that. See, regulatory clarity is going to open up a lot of different opportunities. We can do it cheaper, and we can do it in more places. You imagine people around the world using stellar-based accounts, stellar-based wallets to hold their capital, hold their paychecks, to hold all that capital in, and modicums of lumen being used constantly. XRP, same thing. Even though XRP is targeting the big money, they can do the same thing. I'm sure some offerings that are building on XRPL will have it where they can have their wallets, and you can keep your capital there, bank yourself, and then use your debit card. You know, wasn't Ledger? I'm not sure if Ledger does the same thing or not. But Ledger, they had their Ledger card that they were either putting out or going to put out, something like that. So, I mean, you already see the signs there. They want to get in early. Let them, you know, look, they're no competition to us, in my humble opinion. The legacy system is not doing a good job. The trust in them is at an all-time low. But when we step in and we say, listen, everyone, you can bank yourself. You can hold capital in these accounts. We have a debit card from Visa or MasterCard, wherever. Or, you know, maybe you have a digital thing on your phone, right? And a lot of people do the tap to pay with their digital card on their phone, something like that. And it costs almost nothing. We're not there. No one can take your money. No one can take your capital. No one's playing with your capital. You offer this to the people. You advertise it that way. You say there's no bail-ins. You see, right now, the bank coins can't go directly at their competitors. Don't get me wrong. You can congeal with others and still be in competition with them. You know, so once there's regulatory clarity, I mean, we have to make room for ourselves. It's just making elbow room for yourself. Throw them bows. You're making elbow room for yourself. And we will do that. This is what they're afraid of, right? So no bail-ins, you highlight that. You don't have to worry about monetary policy. No, you are custodying your own capital. Your capital's always safe, right? So, I mean, there's so many different advantages that we have. You want to send something overseas? A lot of people are moving back and forth, digital nomads, and you have people, you know, moving from this country to that. They have to send money back to the old countries, to their family members. You want to do that for less than a penny? We can do that for you. And instantly, we can do that for you. You don't have to go through a legacy system. You don't have to go through all of these different things. You do it yourself directly from your account to that other person's crypto account. All right. We will dominate them at this. And this is another thing that can make those prices go up if these bank coin companies play the game the right way. But we will see. But I just wanted to cover that the legacy system is holding us back to do exactly what it is we were going to do, but trying to do it first. They're doing it terribly. When you have so many different offerings like what the legacy system has, why would the people want to use this as opposed to what they've been used to? No, they want to use, people love, a tradition. They love familiarity, and they rarely want to change, right? Change is something difficult for many people, even though change is the only constant. So they don't want to use this from the banks. But if we're going to come to them, this is all we're known for. This is all we have is banking the unbanked and such, and you know, not your keys, not your crypto. Many people are familiar with that mind state. And they will say, okay, well, yeah, we see what crypto is all about. It's all about the individual and maintaining your own power. We're all about that. And the people are getting pushed more and more that way. So when I see this, I just wanted to bring that to the forefront because I've been saying that for quite some time. The people can use us outright. That's why Christine Lagarde said that crypto could render banks useless. Look that up for yourself, all right? Don't ever have to take what I say. You can always type it in. It's better for you to see for yourself, all right? So now let's move on here because mass adoption is moving forward, right? So we have this article from coinedition.com. It's titled G20 Nations Unanimous on Urgency to Regulate Crypto. This is coming from Indian Minister. The Indian Union Finance Minister, Nirmala Sitharaman, has called for immediate attention to issues related to crypto assets. stating that a globally coordinated policy response is necessary to regulate the sector while protecting economies from harm. No, that's not what this is about. You see, the United States, they feel that they have enough power where they can play this game of holding crypto back, and they're not affected by it because, I mean, there's a little bit of arrogance there. Also, they're sitting on a lot of capital, and their power more than anything, their influence more than anything is keeping them afloat while everyone else is suffering. The rest of the world is suffering. They're saying, listen, we need you to deploy that new financial system because they want to use it. You see India getting deep with the cryptos. We covered a bunch of articles where the bank coin companies, I showed you the articles, right? You read them. Where the bank coin companies are getting deep in India. Then you see the bank coin companies getting deep in China. I don't care what the people want to say, about China. Like Hong Kong is way different than mainland China. Even though it's one China, they have their own way of thinking. I showed you the articles to prove that as well. Hong Kong is embracing crypto. So you see them deploying. Already know what Russia is trying to do. The whole of the BRICS nations. Now you have members of Europe, like France. They're getting on board, say, hey, we need to deploy new financial system. They're getting cozy with China. Listen, the rest of the world needs this new system to pop off so they can have a fair opportunity of moving forward without a weaponized dollar and a weaponized SWIFT system and a weaponized banking system being used against them. These systems, I'm telling you now, these banking systems, the world does not want to use them from the West. SWIFT, the banking systems, the Fed nows, and they don't want to have anything to do with that because it's always going to be used as a weapon. It's all that the West knows how to do. So no matter how shiny they make it, how pretty they make it, their system, they're done. They're done. It's just a slow fall. The knockout doesn't always come where you hit somebody and they're out instantaneously. Boom, they hit the ground in a fraction of a second. Now, sometimes you hit them with a liver shot and they're still coming forward. It takes some time for them to fall. Well, the system has been hit with a multitude of liver shots. If you know what a liver shot is, a lot of liver shots. It's a slow fall, but it's there. They're going, and that's going to force them to have to implement the new financial system. XRP, XLM base, Algorand base, new financial system, Hedera, throw Hedera in there, XDC lurking in the background with all those hundreds of banks that they're working with. Yeah, we know XDC, you can't hide it from us. Quant, to glue it all together, they would have to enact that. And deploy that if the West wants to continue to interact with the rest of the world, who is going to reject them, who is on the rise, who is grouping together to accumulate power. This is why you have this statement being made by the Indian Union Finance Minister, in my humble opinion. They're saying the time is now, or else you're going to get shut out. We're giving you a chance, West. It says here, Sitharaman made the remarks during a brainstorming session on macro financial implications of crypto assets with G20 finance ministers and central bank governors at the IMF's headquarters on Friday. Global experts on the issue attended the session, and there was unanimity among member nations about the urgency to regulate the crypto industry. Why? Because they know once regulations happen, it's off to the races. They know it. All the small businesses won't get crushed anymore once the switch is flipped, and they can adopt all of these different offerings on the bank coins and a lot of other utility coins as well. Okay. Small businesses won't get crushed. They will thrive. Small banks won't get crushed. They will thrive. There's nothing else that is as powerful as distributed ledger technologies right now, because it moves that capital. That value is real to the people. Don't get me wrong. AI is very powerful. It's life-changing. Heck, I've seen a lot of it, how it can do coding, how it can produce images and stuff like that. That's a little bit of a gray area. Now they have the text to video thing. I get that. I say it's almost there. It's right there. But listen, when you need to put food on the table, you need to make sure that your capital can be accessed. AI comes second to that. All right. When you have to make sure that your paycheck is going to come through, and now they can roll that paycheck across a distributed ledger technology, and you can look on chain and see where it was. Is it here today? Is it coming through? Who sent it? When you can trace where your salmon is coming from. Oh, the salmon, I don't know, it's coming from this region. A train turned over. There's some chemicals in the water, whatever. You can check, okay, this salmon came from here at this time, this month, this day, this farm. this salmon farm, and now it was in the store, and now I have it. You can use VeChain or ScanTrust on Cardano or whatever that traceability thing was they were doing with XRP. You can use that. You see what I'm saying? Like, this is huge. A lot of people are not going to see that. They're pushing crypto to the back because of the SEC case and the lack of regulatory clarity. Once there's regulations, it's off to the races. Now, the big companies are going to be the last ones there standing to really reap the benefits. It's always that way. They've pushed so many people out, and a few of us who have the iron hands, diamond hands, such like that diamond mentality that see what's coming in the future. So we have our quick money plays on the side. There's always quick money, right? But that's a personal thing, because that's very dangerous. By the time you get to tell somebody else, it's already over. It's about to go down. By the time you get to make a video or something like that about quick money play, it's already, that price already about to drop, right? People already taking profit. So that's a personal thing, but everybody has quick money plays on the side, right? You have your quick money plays, you have your store of values, your protection, maybe it's gold, silver, something like that, palladium, whatever it is. You do your research. And then you have your long holes, that big money, and that's XRP, that's XLM, that's Algorand, that's Hedera. I don't play with those things at all. I play over here. When it comes to the bank coins, I don't play with those. No, boom, boom, boom. They stay on the cold wallet, air gap cold wallet. I love that. It's like Fort Knox, boom, right there. And I don't play with them. Let them do what they do. Let them set up these infrastructures. Now, so we have that. Let's go here. This is from scmp.com. I wanted to go over this, okay? Hope I'm being eloquent today. Oh man, I feel like lately I've been trying my best to push out the information, but I'm not sure how eloquent I've been. My apologies, everyone. This article is titled, U.S.-China decoupling will have devastating impact on global economy. Haven't I been saying this? Let's read this little tidbit here. It says, it's time to end the fiction that the world can be divided into ideological blocks without massive damage to the global economy. This is exactly what I've been saying. The West is playing a dangerous game. How can you go against China when you get most of your stuff from China? Europe, same thing. How can you go against China and sanction China and treat China badly when they're a world power when you get most of your stuff from China? Then also Europe, you get a lot of your stuff from Brazil. I showed the charts. I showed the data in one of the previous videos. The people who do watch have been able to get that information. That's a fact. So it will be devastating if China ever counteracts what you're doing by shutting you off. Your people will be devastated. People have to think that way. The world is already, they've moved so far into a globalist system. Everything is tied together. But let's continue on here. I'm going to let these guys tell you. So this is understood by some economists, but not by many politicians. I told you. See, I told you, didn't I say? The politicians, they behave very ignorantly. I mean, with no disrespect, but as an observation, they behave very ignorantly, while economists and researchers, because I've been saying this as well, so let's throw the researchers in there, have been saying these things. We can see what is actually there. Let's continue on. This is understood by some economists, but not by many politicians who control the levers of global power. The global economy is not just splitting into two as a result of cynical political maneuvering. It is in danger of falling apart. How could it be otherwise when great power rivalry is eroding global trade and financial links? Hence why you would need a new financial system in the middle, agnostic bridge currency, settlement tokens, liquidity tokens, neutral ones in the middle. XRP, XLM, Algorand, Hedera, etc., XDC, LCX, Quant. They're going to need something in the middle because of this. It says, and ratcheting up strategic tensions almost daily. Arrogance, ignorance, volatility. They're doing it out of arrogance and ignorance, in my humble opinion. Volatility in stock and bond markets, exchange rate fluctuations, swinging inflation expectations, and falling business confidence are all symptomatic of this sad situation. So too are declining business investment and financial system scares, plus a general sense of economic malaise. U.S. President, redacted. Okay, let's skip that little part there. I don't need to say these politicians' names because that causes a lot of trouble. Let's move on. Let's move on from that. At least for my channel, it does. Says that is no reason. I'm skipping a little part about wars and things. That is no reason, however, why so many others are as mealy-mouthed as they have been about criticizing the irresponsibility of those leaders who divide the world in pursuit of narrow nationalistic goals. Reluctance to speak out has only deepened the dangerous global divides we are witnessing. Setting aside the more extreme views of those wedded to a pro-US versus pro-China line, or a pro-redacted versus pro-redacted one for that matter, too many economists have spoken of these schismatic and destructive impulses only as though they were accidental phenomena, regrettable but unavoidable. There have, however, been a few exceptions to this egregious conspiracy of silence. One is an International Monetary Fund blog article titled, quote, Geopolitics, and we just covered a geopolitic article, I think, in the last video. Quote, geopolitics and fragmentation emerge as serious financial stability threats. Exactly. The people have to demand that their politicians, that their governments behave more rationally, less emotionally. But now the people have been conditioned to be completely emotional. You don't think well when you're completely emotional. If one watches themselves, and maybe I'm just projecting a bit here, and I probably should not, but if one watches themselves, I found that when you're overly emotional, you don't make the best decisions. But when you're calm and you can think clearly, you can assess all the foreseeable possibilities, weigh them against each other, use discernment, right? And with a calm, you can make the best decisions. When you're emotional, you're more frantic, you're more irrational, you lash out, you do things with a shorter vision because you're worried about the now. What do I feel now, right? It's not so much about what you're thinking, it's about what you're feeling, but thought must always come first, right? Thought is how we do everything that is great. It's how you build a computer, build a car. It's how humanity, forms civilizations through thought, not emotion, right? So, I'm not saying one is that much better than the other. You have to have a balance is what I'm saying. Everything should be in balance. But what happens when people go by emotion, they tend to just push their thoughts completely to the side. They do not think, right? You have to have a balance. Always use thought. Use your intellect. The intellect is powerful. So anyway, what's happening here is that is obviously not being utilized. And so is bringing a lot of trouble, as we can see. People are living through it. It's bringing a lot of trouble to the peoples of the world. So now let's move on here. I'm going to skip one article here. This article is from money.usnews.com and is titled, Yellen says U.S. banks likely to pull back credit. U.S. Treasury Secretary Janet Yellen said banks are likely to become more cautious and may tighten lending further in the wake of recent bank failures, possibly negating the need for further Federal Reserve interest rate hikes. There you have it. So now we know why that other company, I can't remember which one it was. It was a big bank, I believe, that said, it might have been Goldman Sachs, that said they believe that we're going to get a 25 basis point raise in May, but then no basis point raise in June. And I was saying to myself, why would they think that? Now I know. They have the inside scoop. They're making phone calls, obviously, probably have spoken to representatives, if not to Janet Yellen directly. And Janet Yellen is pushing this here. And I could see that, but why would you trust that in the hands? See this, that type of mentality where the U.S. Treasury or the Fed is trusting the fate of the United States in the hands of the same banks that have put everyone in this bad position and have fumbled the ball, so to speak, so many times. You're going to put the fate of the United States in the hands of those banks when it's your responsibility as the Fed, as the U.S. Treasury to do so? Do you see that? There's something wrong with that. In just my humble opinion, there's something wrong with that. But that's why now I understand. That's why now there's so many calls for a pause to the rate hikes. We see now. Yellen said in a, quote, Fareed Zakaria GPS, quote, interview that policy actions to stem systemic threat caused by last month's failures of Silicon Valley Bank and Signature Bank had caused deposit outflows to stabilize. Quote, and things have been calm, unquote, according to a CNN transcript released on Saturday. Quote, banks are likely to become somewhat more cautious in this environment, unquote, Yellen said in the interview, which is scheduled to air on Sunday. Quote, we already saw some tightening of lending standards in the banking system prior to that episode, and there may be some more to come. unquote. She said that would lead to a restriction in credit in the economy that, quote, could be a substitute for further interest rate hikes that the Fed needs to make, unquote. I personally would not trust the banks or banking system. I don't trust them, but it's unbelievable that they would leave that in their hands, right? Maybe they're just looking for someone to blame if things go awry, right? We will see. So now, let's go here. So we have this article. This article is from seekingalpha.com. It says OPEC oil cuts could worsen inflation, hurt global economic growth, IEA warns. OPEC plus production cuts announced earlier this month risk exacerbating an oil supply deficit expected in this year's H2 and further weigh on a global economy still trying to recover from the redacted. The international agency said on Friday, the gap between availability of crude in the global oil market and rebounding demand will reach 2 MBBL a day by Q3, the IEA said in its monthly report. The gap, which oil producers outside of OPEC will be unable or unwilling to fill, risks sending crude prices sharply higher. Get ready. Worsening inflation just as it appears to be moderating, the IEA said. The agency said it forecasts global oil supply to fall by 400K BBL a day by year end, citing an expected production increase of 1 million BBL a day from outside of OPEC plus versus a 1.4 M BBL a day decline from OPEC plus. For the week front month, NYMEX crude for May delivery ended plus 2.2%. And June Brent crude settled at plus 1.4%. So now let's head to this next article here. There's so many variables, so many things going on to keep up with. It's unbelievable. It keeps us busy. I'll say that. It's interesting, but it is unbelievable. My word. You have these positives, maybe an altcoin season, maybe a bull run, but then there's the possibility of deceleration. There's also the possibility of hyperinflation. What's going on with OPEC? You have the global debt. You have the U.S. debt. They haven't come to a deal on the U.S. debt. That puts more pressure on the financial system. There's so many things going on. So we have this article here. We're going to close out with a little bit of gold news. This is from fxleaders.com. And it's titled Gold Sticks to 2000. Gold was showing extreme resilience last week after some softer economic data from the USD showing that inflation is slowing at a decent pace. We just read that article on OPEC Plus. It's interesting to read this one now. Slowing at a decent pace while the jobs market is softening. XAU/USD pushed up, reaching new highs for this year of almost $2,050. But after negative retail sales report showing that sales fell for a second month in March in the US, gold prices experienced a reversal on Friday, falling below $2,000. This reversal was triggered by a rebound in the DXY index after it hit new lows for 2023 in the 100.80/75 range earlier. The moderated bounce in U.S. yields also contributed to the decline. I'm never worried about gold. Literally, I'm never worried about gold. Because of harsh economic circumstances and where the global economies are going and where they could go, I expect gold to explode at a certain point. Don't get me wrong. When we got into gold, when we start discussing gold, it was at a good low. We're sitting pretty. We're doing great right now, right? But I'm saying in the future, given all the catalysts, there's a great possibility gold will explode. So I don't worry about it at all. Markets are currently pricing in a 25 basis point rate hike by the Fed at their May 3rd meeting with an 80% probability according to CME Group's FedWatch tool, up from 40% a month ago. If gold had pushed above the recent peak of $2,048, it could potentially move towards 2022 high of $2,070, which is just below the all-time top of $2,075, which was put in place in August 2020. We're going to leave that there. Once again, that's from fxleaders.com. All right, if you want to read the rest of that article there, they're doing a great job over there. Give them some traffic. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.